Good morning, everyone. Welcome to the Modern Market. This is our daily show from Monday to Friday at 7 a.m. Eastern Time, 12 p.m. BST, every day of the week, where we discuss all things to do with the modern market. That is the crypto market, the NFT market, and frankly, anything else where we may sniff an opportunity of making some or a lot of money on the internet. I'm your host, B-Check. I'm joined by my legendary co-host, Legendary, and Sammy. Today, we've got very special guest, good friend of the show. We've got Brad back with us. Brad, how you doing, my friend? Great to have you with us again.
Hey, buddy. Yeah, things are well. Excited to talk a little bit about what's going on in the market.
Looking forward to it, man. Just a reminder, friends, just before we get into it, that nothing that we say here is financial advice. This market is exceptionally risky. We don't know anything for sure, so please proceed with caution and exercise your own judgment. With those disclaimers out of the way, Legendary, it is Wednesday. It is the 22nd of May. How you doing? How you feeling, my man?
GM, all going well so far. I did book my flights to Lisbon yesterday. I claimed my Canberra gold distribution. I claimed Fantasy Top. I claimed two jackpots in a row. Ooh. So gold stash is growing fast. I'm very, very happy with that.
That sounds pretty fun. Also, you were telling us off air you're doing a bit of aggressive exercise. How's that going?
Yeah, absolutely. Decided to pick up martial arts again. Been doing MMA for a while, but now want to focus on boxing more and going for private boxing classes at home, which is pretty sick because it saves you a lot of time if you don't have to go to the gym and the gym comes to you.
That is pretty cool. I do like that a lot. As I was saying as well, I like going to those old school boxing gyms. Like the worse, the better. The worse the equipment, the more sweat like dripping off the walls, the older, more dubious the other boxers, the better to me. That's my opinion. Brad, are you into martial arts at all? Do you ever just get into any of that stuff?
I used to wrestle. I now do powerlifting instead.
Interesting. I definitely have seen some of your exercise content need more of those statistical breakdowns.
Yes, I could probably give too much energy to it, but yeah, it's a lot of fun for me.
Good stuff. Sammy, how you doing, my man? Nice, huge win for you over, I think, overnight with the Cambria Gold. Congrats on that. How you feeling?
I'm good. Settling back into the market. Had a few drinks last night, so feeling a little bit rusty today. But yeah, I was in the moment of being in a pub, not being able to claim the gold, having no idea what I was getting, and then got home pleasantly surprised after a few beers. So yeah, good day.
Pretty good stuff. So it wasn't a celebratory drink for the gold. Like there are other reasons for you to leave the house and socialize with people at the moment. Unrelated to your blast.
It's bad. I shouldn't be doing that. I should be locked in, focused in my lane. But I just couldn't resist a few beers, touching that grass, getting out.
But you still can say it was a pre-celebration. You posted the amount of gold you received, right?
I did that after.
Yeah, so we can. Yeah, no, I know, but so we can say it was more than 4,000 gold that you claimed from Cambria alone.
Yeah, in total, yeah, for Cambria.
That's pretty sick.
So 4,000 gold. I mean, Legendary, I think you got a nice chunk as well. 4,000 gold at the current NFT stats estimates. Sometimes revised,
$10.
Often revived. Say again, Sam.
$10 total.
That's the optimistic NFT stats estimate. Currently $6, right? So potentially over 20K. Are you hopeful of that?
ETF ETH pump, right? It's pre-moon math.
Pre-moon math.
Yeah, L2s are now more expensive.
It's funny. The tech is so much better now, isn't it?
Yesterday's price is not today's price.
Indeed. Right. Let's get into it. We want to talk more about ETH because and the ETF because yes, we discussed it yesterday, but I feel like we want to talk about it a little bit more. Big kind of arguments I'm seeing on the timeline and in spaces about ETH versus Sol. That definitely seems to be one of the kind of battles of what do you do next. So I want to dive into that a little bit more. And then, as always, we'll hit the headlines. We'll hit the Mocaverse news. and we will do Farcaster because that's pretty interesting raise that they've managed to achieve. So got all of that to come as usual, but let's hit the headlines and price action first from the snapshot, which is pinned up top, sharing it on screen for the people watching in live on X and YouTube. Starting with some price action, we've got Bitcoin at 69.8K, just down 1%, ETH up a couple of percent, well, still at 3.7K, Solana steady at $179. First headline, ETH is another step towards the ETF approval as 5 ETF issuers submit amended forms. Jason Safe tweeted, this is one of our Bloomberg friends, it's happening. We have at least 5 of the potential Ethereum ETF issuers that have submitted their amended forms in the last 25 minutes. This was yesterday, I believe. Fidelity, VanEck, Invesco, ARK, and Franklin all submitted by the close of business at the end of the day yesterday. Number 2, Mocaverse went on an absolute tear. They heard that I'd sold some NFTs and decided to release the tokenomics. It ripped 42% to 3.7 ETH after the tokenomics reveal. The details were these: about 10% of the Mocaverse supply is going to go, 10% of the whole supply is going to go to the NFTs, but they don't get it all in one go. It's going to be 1/3 unlocked at TGE, 1/3 vested for a year after a 3-month cliff, and then 1/3 reserved exclusively for future incentives. Interesting mechanic. We're going to dive into all of those details as well. Fortunate to have Sammy with us, who is an ambassador. So I'm sure he will be able to give us a proper breakdown. And then finally, ex-rival Farcaster raises a $150 million Series A with Paradigm leading the investment at a $1 billion valuation. The funding round was led by Paradigm with participation from A16Z Crypto, Han Ventures, Union Square Ventures, Variant Fund, and Standard Crypto. They've integrated with Arbitrum. The platform has about, I think, 80,000 daily active users at the moment. Definitely want to talk about it from the SocialFi perspective. I know Brad has a lot of thoughts on SocialFi in general. Definitely want to hear his thoughts on the Farcaster stuff, as well as the other stuff too. Some prices from around the way. CryptoPunks at 35 ETH, Bored Apes at 12.9, Mutants at 2.3, DGods at 1.4, down 11%. DGods a big mover there. Captains at 3.2, Azuki's down 8%, also at 4.6 ETH. Penguins flat at 11.5, Mad Lads steady at about 69 Sol. Noun's winning bid was at 5.9 ETH. Legendary, that is the price action. Those are the headlines. Before we get into the bigger ETH discussion, the bigger Mocaverse discussion, the bigger Farcaster discussion, what is catching your attention in the market?
Yeah, absolutely. There are 2 things that are standing out to me right now before we head to the Mintify heat map. On the token side of things, if you look at the BNB chart, BNB is super close to all-time high, up to $623, up 10% on the week. All-time high is recorded at around 630 on CoinMarketCap. I know Bybit has it high at 680. Always a bit of discrepancy with all-time highs, but again, it's the sleeping giant of the tokens from an American/European perspective that nobody talks about, but is just absolutely ripping. So that's pretty impressive to see.
Just for people's context, before you go on to the next one, in January, or as recent as December, it was, what's this price?
270, right?
Yeah, 270. We're at 623 now. Crazy.
That launch pool has just been a money printer for people. Like that's where a lot of that is coming from.
Interesting.
Basically, been participating in every launch pad. My BNB is just chilling on Binance and waiting to be used there. And I don't know, at some point, profits will be taken. But yeah, I think on average, you've had a like 2%-ish return on every launch pool token that has launched. Also, maybe on the launch pool, real quick, I don't know who it was, and I don't have the post readily available, but someone posted the performance of Binance launches, like from the ones that did better, like Ordi, and down to the worst Binance performances pre-listing, post-listing, and the worst one is actually Portal.
Really?
Yeah.
Interesting. Just so people know, when you say you're involved in the Binance launch pool, Legendary, just, as you say, I think sometimes either the BNB coin might be ignored from some of our audiences. We probably skew west. What does it mean to participate in those type of launch pools?
Yeah, absolutely. What it means is basically some Binance tokens get a more preferential listing. They get to be part of a launch pool program where you can either stake your BNB or you can stake stables to farm an allocation of the token. And that's like mostly a 1 week farming period. I think we are at 52, 53 tokens we have launched on the Binance launch pool so far, and you can just deposit it there, farm for a week or whatever the time amount is pre-TGE, then claim those tokens of the respective token in the launch pool and go back to holding your BNB. And that's basically all you have to do. There's no additional lockup, nothing that goes with it.
Okay, interesting. So it's kind of like you stake your BNB in order to get your, and then your yield is the new token that's coming out.
Yeah, and typically, obviously, because BNB is the more volatile asset and the one they want to promote more, you have, relatively speaking, a way higher return on BNB versus stablecoin staking.
Interesting. Okay, that's pretty cool. As we've spoken before, there's a bunch of people trying to launch these launchpad style products at the moment because I think people know that it's quite lucrative. So you said that was one thing that's catching your attention, which thank you for bringing that up because I think that's very interesting. Second thing before we hit the heat map?
The second thing is the heat map. It is the Mintify heat map.
Let's get
I
to
think
it.
we touched on some of the things yesterday, but that story keeps to unfold more and more. You mentioned Azuki's being down 10%. The rest of the market is also down. Pudgies are down 3%. Little Pudgies are down a bit more. Pixelmon down 7%. Again, Milady is up 4%, and Milady is now at a 5.6 ETH floor, and put that against the 4.5 ETH Azuki floor. That gap is growing. Yesterday it used to be a 0.5 ETH gap. Now it's more than 1 ETH gap between those two collections if you look at floor prices.
Damn. Can happen so quickly. Milady's on an absolute tear. Thanks for pointing that out. Sammy, what are you looking at here? Anything catching your eye before we get to the Mocaverse stuff, obviously?
I'm feeling severe FOMO to buy Remilio. I don't know why. I just feel like we're coming into a bit of a meme coin thing. Like it just feels right. I've got nothing to go off it other than vibes and a bit of FOMO seeing the price go up. I'm just seeing that, just thinking.
Stop it. Yesterday I had dinner with Zamiri, who was visiting in Vienna, and we both said we are actually thinking to buy Remilio and would be a nice PFP for the meme coin season. So don't reinforce my FOMO by saying similar things.
Okay, well, the thesis has been secured, so we're definitely doing it then after the show. Everyone else in the audience is going to front run us now, but
all right.
Yeah,
I think I guess I've got some Mocha profits. I can buy one as well if that's what we're going to do. Quick question on this though, because I genuinely don't know. Maybe you guys don't know either. But what's the thesis to buy Remilio apart from the fact that it's cheaper? Is there a reason to go Remilio over Milady? Are they like the younger cousins or something?
I think it's just the beta. Like people are priced out of Miladies. Just go for the Remilios.
Okay. Fair enough. Well, they're absolutely ripping. And there is that statistic that NFT Stats shares as well, right? Where instead of thinking that when things go up, thinking that it's going to come back down, like NFTs are like these momentum assets, which the more the price goes up, the more that they keep going up.
Redland goods, yeah.
Yeah. So you can kind of act in quite you can get pretty violent moves in that respect. Brad, before we get into the headlines, I want to touch in with you here just for maybe general things that's catching your attention. You were talking about Friend just before we went live. Don't know if you want to touch on that or anything else.
Yeah, honestly, I'm still just getting caught up on what the market's doing. It's 6 a.m. here, so yeah, saw Friend, the second largest holder, just clipped his way out last night. So I'm documenting that, posting it for people to see. He commented on Twitter. It's pretty funny. Just says fingers slipped. And he also had his own. He was actually the leading club on which is something that came with V2, and he sold about 200K Friend worth there, which is equivalent to whatever that is, $300,000 worth, and that's on a bonding curve. So like that's a little steeper if you start selling on that, which he did, and now it's kind of chaos. So just watching that, and then I'm going to dive into Fantasy Top here in a little bit to kind of see what the market's looking like.
Nice. Very interesting. We were speaking about Friend yesterday as well, in the sense that in comparison with the other tokens, which are coming under a great deal of criticism because they are low float, higher FDV, Friend has kind of reversed that whole dynamic, whereas actually a lot of the tokens are already in circulation. So in that respect, Brad, does that make you kind of less concerned if one big person is selling, because everyone knows, well, all of this stuff's in circulation, or the majority of it, so we can maybe buy that dip?
Yeah, I mean, the argument against that has been like the traditional VC stuff is that the seller is the unlocked tokens, right? So like, yes, like there is no seller like that is outside the current holder base that is coming like with an unlock in the next week, month, year, whatever. But yeah, it is fairly well distributed. So I would say it's not as, I don't really think about that as like being afraid of sellers on either side of things, because that's just holder concentration of circulating coins, and this is pretty well distributed. And thankfully, there's a pretty thick liquidity pool, so that it was able to absorb a lot of that. So yeah, nothing. I would say that whether it's 100% distributed or not doesn't really give me any less fear for what's going on, other than it makes me hopeful that it can capture the narrative that like this is the anti-VC coin and that might make it go up. So outside of that, no, nothing.
Okay, interesting. Appreciate that perspective, especially because these coins now coming to market. A, there's so many of them coming to market, and B, I do think people are getting slightly more sophisticated, at least in trying to analyze like, well, who are the potential sellers and the stakeholders involved here. So always good to touch on that. Just want to, before we get into the main discussion, we're going to touch on ETH first. Funky, I see you with your hand raised. Did you want to come in on something specific here?
Not something specific, if it's okay. I just want to do a real quick PSA.
Yeah, go for it.
Okay, so as the U.S. political correspondent, I feel it's my duty that I have to tell everybody, especially for my American friends who are listening, if you haven't already done so, I put it in the replies. It's called Stand with Crypto. It's this kind of nonprofit that's been organized around a lot of the exchanges and so on and so forth. The FIT 21 bill, I believe, is going to be voted on today. There's a really easy thing. You can just click on the website. There's a template you can fill in. You can just submit an email that's real quick asking your representative to vote yes on FIT 21. This is something that impacts the entire industry. And I even called my senator. There's like a little 3-step thing. I probably did the email and the phone call in under 5 minutes. It's super, super easy. Please, please, please make your voice heard. This impacts everybody in the industry. Thank you guys for giving me this time to just be the U.S. political correspondent and give this PSA. Much love.
Appreciate it, Funky, as always. As you say, it seems like there's some winds of change in the US going on in general at the moment, and this gives people an opportunity to be a part of it. So definitely take the opportunity if you can. Appreciate that, Funky, as always. Sticking with the kind of political change and the ETFs and things of that nature, let's pivot into kind of a conversation on ETH here. I think in the last 24 hours, we obviously had this news from James Seifert. I'm going to share it for the people watching in on X and on YouTube. Said it's happening. We have at least 5 of the potential Ethereum ETFs issuers that have submitted their amended forms. Things very much look like they're on course. He also said this, still a potentially long way from launch, but these filings prove that all of the rumors and speculation and chatter have been accurate. Need to actually see the SEC approval orders on all the 19B4s. And then we need to see additional approvals. Could be weeks or more before ETFs launch. He made a note that the only meaningful and substantial change that he can see is the removing of the staking language. We touched on that yesterday, that staking is now not incorporated into this. But that's basically it. They've upped their approval, just as a summary from yesterday, that their approval odds are now up to about 75%, and feels like the wheels are in motion. Want to get into a bigger discussion in a little bit. Just want to throw to Bread on this first, maybe, just to kind of hear your broader reflections on this. I think we only heard from you quickly yesterday when it happened, but I guess 2 things maybe stood out to me. One, just like what are your thoughts on the ETH ETF in general and its consequences for the market? And second, something that came out in our second show yesterday, the removal of staking from the ETF. Like, do you think that's a big deal? Is that fine? Is that just political stuff going on at the moment? What are your thoughts?
Yeah, setting my personal take of like, I'm a long-term person here and I'm just fine, happy, chilling and stuff. So with that as a background, it sucks that it's not included because it is something that's novel to Ethereum that would be beneficial for it, that I think is and would be a boon for it carrying higher. I've for many times for over a year now. I think smart contract platform is going to flip Bitcoin. I just think the addressable market of a programmable, productive asset is much, much larger than a speculative one. And I think Ethereum has the best chance for that because of this ETF, right? You're not going to see another enterprise exposure platform coin come because you need futures, you need a bunch of stuff. So like roadmap's long. And I think yield is a very big component of that. And staking is obviously the leading source of yield in smart contract platforms. So it is unfortunate that it is not included in this first wave. I understand why it's not included in this first one because there's a lot of skepticism and stuff. I think it's an inevitability. It's going to come. So me being a long-term investor here and participant in the ecosystem, it's unfortunate. It's coming at some point. Whenever it comes, you're going to start seeing them ladder on all different types of yield, and they're going to compete on that front. And yeah, this stuff's just going to keep going up and to the right.
I got two follow-up questions here. One for you, Brett, specifically, and a more general one. It's something we touched on yesterday in terms of the staking. When the staking will come for the ETFs, are you worried that that could basically make ETH a more centralized place if the ETF providers then take a very large, stake in ETH by just blowing up massively and staking all that ETH? Or do you think that would be set up in a more decentralized structure even from the ETF providers?
Yeah, so I have two opinions on this. One is that like the actual ownership of this stuff does not mean anything, right? So if they own Ethereum, if they own Bitcoin, that's not going to give them more power. Because if you understand the actual technical structure of these things, basically the people that control it are the people that run, it's called a client, on top of these nodes, right? So it's a piece of software that allows you to interact with blockchain, do whatever. On Bitcoin, there's a single client team, Bitcoin Core, right? Like 99% of all Bitcoin is run by that. So like in Bitcoin, even though everyone owns Bitcoin, everyone's doing whatever with Bitcoin, the ownership of that, like people can make changes to that piece of software are the people that really have like the biggest centralizing factor. Likewise with Ethereum, there's a single client that picks up like 30-40% of majority now. And then there's like 6 other client teams that run the rest of it. So the fact that people own Ethereum, stake Ethereum, make all this stuff, they don't have power to really change the behavior of Ethereum to implement changes to do whatever, right? The power mostly at this point, if you're talking about centralization vectors, are these developer teams that own the clients on top of stuff. And Solana is the only other blockchain. So if you think of all blockchains have one, basically. Ethereum has like 7, and Solana is now working on a second. So in the grand scheme of things, if we're talking about centralization, that's probably the scariest centralization vector. It has nothing to do with ownership of actual assets on these things. So it doesn't concern me. If these guys stake, they're probably going to do it through either liquid staking or they're going to do it through Coinbase, and Coinbase is going to run it through Lido, and Lido has a decentralized setup. So like I think it'll be something that's overblown, but it's going to be a strong narrative. You're going to hear it.
That's such a good answer, because I feel like not a lot of people have that awareness of the client side of things, not the technical setup side of things, and they're just thinking about amount of ETH staked divided by total amount, and this is the power factor that you have, which, as you said, is not perfectly true.
If they had on-chain governance, that would be yes, but Ethereum does not have on-chain governance, right? You can't say, oh, I have Ethereum, I'm going to vote on something. It's all off-chain governance.
And the second question that I have, that's a bit of a broader, more creative one. I think someone mentioned it in one of the comments yesterday under one of the Bloomberg analyst posts, in terms of, yes, they're not allowed to stake, but would it legally be possible? And I don't know if this works out, but just thinking out loud. So say you have, 1,000 ETH are only staked with an ETF provider to keep numbers low and like easy to do the math and follow. And the ETF provider then goes and buys, say, 100 ETH, that's nothing to do with ETF, stakes that ETH and takes the yield to basically reduce the management fee or even have a negative management fee. I don't know if you can have negative management fees with ETFs in the US. I have no clue, but could you do that and basically say, we're not staking ETF ETH, but we're staking separate ETH, and use that to reduce management fees to just have the more competitive product compared to other ETFs who won't do that?
Are you saying that ETF becomes a blaster mint?
Yeah, well, hold on to yourself.
But you deposit your ETH, don't worry about paying us because we'll just take it off the top.
Sounds like it. And so like I can't speak to the actual legalities of that, but that is why I'm so excited, or why I think it's inevitable that this will pile in more people where it will run higher than a purely speculative asset, right? You're talking about these competition vectors where now you can, once this becomes a thing, right now it's not, so maybe they do some stuff on the back end, but eventually it will be, because they're already applying for it. It may not get denied this time, it'll be put in at some point. It's competition vectors inside the ETF, right? So then now everyone is going to be allocating funds to crypto as 1% of their portfolio. They're going to go, well, this one over here gives me 1% back, or they have some weird novel shit. And then this other one is just like crypto exposure, right? And then people just, they love yield. Everyone loves yield. You're seeing what it's doing to the Blast ecosystem, right? Just because that default switch is turned on, everyone's minds are exploding, right? And it's always been there, but now it's default and it's there, people are looking at it. I just think that's going to continue to happen, except now it's going to be institutional grade yield and then yield products. And trad bros love it.
Yeah, that concept definitely seems very, very powerful. Sammy, did you want to come in on this in particular? Otherwise, Funky, I believe, had his hand raised.
Well, yeah, I think the DCF models, you see those in some of the projections that Van Eck put out and all those sort of reports. You just know, just to Brad's point, like they love yield. And I think that is why they'll probably love ETH. And yeah, I think some of these other assets as well eventually. And I think there's been discussions around, well, what's the next ETF if ETH gets approved? Is it going to be a basket of altcoins that kind of indexed? But yeah, it's certainly interesting. It'd be interesting to see which way it goes.
Okay, so what's the criticism then, Brad? I think you were in the second show with me yesterday. What's the criticism to the point? 2 points. One, well, there's no yield at the moment then because you're not allowed to stake. So that's a problem. The idea that, inflows could be significantly less than Bitcoin and there won't be as much demand. And then the final thing being, this is like the final hurdle for ETH. Like everything in crypto seems to need a narrative like, oh, once we get over that hurdle, then the price is going to go up. Once we do this, then the price is going to go up. Like, is there a problem from that perspective? Because after this, it feels like we're all in the clear. I personally think this is bullish. I'm just presenting some of the alternative perspectives. Like, what do you think about that, Brad?
I think I've been tweeting the other day. I think the flows are going to be underwhelming because it's the exact same thing that happened with Bitcoin, right? Everyone's all excited, like, oh, that we had the event's going to happen, and then it just takes a while for the marketing arm to get spun up. And you're right, like there's no one-liner that they can send out right now, especially with yield off the table, that can really get someone excited, right? Nothing. Crypto is not familiar enough in the traditional ecosystem for people to not have to spend a little bit of time before choosing one or the other. So like the things that Ethereum has going for it is that smaller market cap. So people might just say default, more upside. Okay, cool. There's that productive asset, even if they don't actually understand like the technicals behind that. Like, and then there is yield. And Sammy just mentioned the discounted model that you can they can actually model Ethereum based on some of the fees or whatever. Like, and people are already doing that. Van Eck has been doing it for over a year now. They're trying to do it like an actual corporation. So there's some familiarities there outside of it just being like new asset, but it's not as quick and sexy as like digital gold, which I think resonates with a lot of people. So I think it underwhelms, honestly, once it approves and once marketing and familiarity comes up, then yeah, it'll outpace.
We've actually just released, we've just received about an hour ago, the UK has just announced that ETPs, so exchange traded products, have gone live for ETH and BTC. So they're exchange traded notes. I mean, I'd say it's kind of like an internet bond where you've effectively, the underlying asset is the ETH or Bitcoin, but it basically means that you've got these financial institutions that are now going to be able to trade these products. They are securities, I think, but yeah, it's not an issue because they're all regulated anyway.
Just one mini comment on that for the ETPs in the UK. Retail ban is still in effect, which means they are not products that retail can buy. It's only for professional investors.
Lucky we're so professional then. That's pretty fortunate for us. Okay, an additional thing which I have been thinking about, which I don't see people talking about as much. I think a couple of things happening which make me more confident in ourselves as people who are able to formulate opinions, because so often I see on the timeline people saying things about certain things, they just like completely miss the main thing. We've seen this all the time with Blast, where people keep talking about it as only a Ponzi, only as a marketing thing, only as this. It's just like, guys, it's got native yield. Like that's like an actual real step change in innovation. It's like a legit different thing, which differentiates it from everything that's come before. You can't just say that it's nothing and be distracted by the Ponzi. So One of the other things that I've been thinking about, which I haven't seen much, and this is with respect to ETH, DC Investor wrote this yesterday. I'm going to share it for the people watching in as well, is the conversation about ETH, about its supply and its like actual kind of tokenomics and the way that the burn works. So this was his thinking. I just wanted to present it as part of this conversation we're having on ETH now. He said, very few people are prepared for an ETH supply side crisis. There is no ETH being mined during this bull market, hence no miners to dump. ETH issues only 2,500 ETH per day to secure itself via proof of stake, and most and sometimes all, and then some of that is offset by fee burn. Even if it were 2,500 ETH is nothing compared to the tens of billions of dollars per year other networks are paying for their security with token inflation every year. And much, much more ETH gets siphoned into productive use in DeFi, staking, restaking, and now burgeoning use on L2s. Then I think he gets kind of annoyed and starts dunking on people who capitulated over the weekend. But that's the key point. Legendary, I want to come to you first, and then want to go around the table, because is this something do you think people are ignoring? Like, is that right for me to be thinking that? How are you thinking about ETH from the supply side?
Yeah, I think you said it, DC Investor said it. ETH is just such a useful asset to have, right? You can put it to work in so many different places across so many different L2s. And the L2 part is a point that many people are constantly missing who love to dunk on ETH. Like especially Solana maxis who love to come with the argument that transaction costs are so high, or were so high, they are not right now on ETH. Just missed the point that you have a dozen L2s to choose from to basically solve that problem if you want to, where you also have the full DeFi infrastructure, whatever infrastructure you want to use. And I think people are completely missing that point, that ETH is a very productive asset. And if it's put to work, and if there's like ETF demand, there's not going to be a lot of ETH that can be just traded for speculative reasons. I mean, the counter argument to that also is that even if it's a productive asset that's put to work, it's not the case that it's all the time locked up in time-based staking contracts or whatever. So if there's significant price pump, yes, money can be unlocked from whatever yield farm you have it in and just dump it on the market if ETH hits, I don't know, 5K and you want to take profits. But I do definitely think about the supply side of things and agree with DC Investor, who also had multiple posts on the beta plays being L2s, on the like fifth and sixth order effects of an approval. And his one of the fifth order effects that he describes, which I found interesting and fits into this discussion, is saying that crypto will achieve significant institutional legitimacy with banks and brokerages starting to add more crypto products, institution, corporations, brands, yada, yada, yada. And nation states start to build on public blockchains. In his opinion, many will choose Ethereum L2s with some other L1s as a possible beneficiaries of that. So even that fact that it's not only institutional demand for ETH as an asset, but institutional demand for the technical infrastructure would then further reduce that free floating supply.
Okay, excellent points. Sammy, maybe you can answer this for me. One of the debates we've been having recently, I think, is, well, this is what I think. I'm trying to represent faithfully Solana people's perspectives, and bear in mind, I'm pretty sure all of us here own some Solana, significant amounts of Solana. Like, we're not saying that Solana is bad, but I guess one of the arguments has been, well, Solana's just outperformed. It's like pure outperformance. That asset, just holding it spot, is better. It's better because it goes up more. Whereas I guess one of the things we're saying about ETH is that it's so much more useful. Maybe that doesn't necessarily mean that it goes up as much, but you can do more things with it. But that's different to the asset actually being the one that goes up fastest, therefore it's the best asset. Is there some confusion happening there, Sammy, with like how we're comparing these things?
Well, I think the supply demand dynamics are slightly different. I think that
for Solana.
Yeah. So between ETH and Solana, I think Solana is probably more. I mean, there's the discussion around inflationary models and stuff like that, and I think that there is a lot more institutional appetite at the moment for ETH, and I think that we haven't necessarily seen the impact of that yet. We've seen like there's potential for an ETH ETF to be approved imminently. I do think that once that kicks in, I don't know where it's going to go, and then we don't have that much experience or like historical evidence to forecast that. I mean, we've got Bitcoin as a proxy for demand, but it's just a different thing as well. Like you said, it's a useful asset to have. I just have ETH in all my wallets, whether it's layer 2s or mainnet, just because like it's just useful. And I think that like Solana, it has a different use case, right? It's just it was quick and easy until it wasn't. I know the Firedancer upgrades it's going through, but it went parabolic during the meme coin stuff. I think as these chains mature, I think they'll find their own use cases.
Yeah.
I just think it has different value propositions, and I think that Solana will have a use case. It will have good value. I think it's going to appreciate and value the price. I couldn't like I can't predict the future in terms of like where the price is going to go and how much and which like and how high it's going to go. But I do think they both have equally as good value propositions. I just think at the moment, with institutions coming in, we saw that with Bitcoin, it absolutely ripped. If you've got that much buy pressure coming through, then, and it's also being used on a day-to-day basis at settlement layers for layer 2s and all this kind of stuff. I think that, yeah, it makes sense for me personally as someone who's ETH native, but it doesn't mean to say I can't hold both.
Sure. Well, yeah, exactly. I think that's part of the point. Brad, how are you thinking about this then when kind of looking forward to not only what seems to be a pending approval, but also like once these things start off already, I've seen people looking to be like, well, what's the beta play? What's the play? Like, is the beta play to ETH Solana? Are you thinking about things in that way at all? I know you said you're a long-term holder. So how are you thinking about that?
Yeah, so before we go into that, I want to do one touch on the emissions thing. I think the people don't discuss. So that was famously a big thing, a big narrative for Hal Press. Hal Press is a famous ETH bull, but people dunk on him too. But his entire thing was doing the calculations on the dollar weight or the dollar amount of emissions, right? So if you have a chain that is constantly emitting a coin, obviously it's denominated in that coin. Let's say you're giving out 1,000 per block, right? As the dollar value of that goes up, right? As the bull market hits, that's weight. That's weight on your coin, right? Because now every block you're emitting 1,000 times dollar value. So if your coin goes from 1,000 to 10,000 and you emit 1,000 per block, every block you're giving out, you're emitting into the ecosystem 1,000 times 10,000, right? That's way, way more. And all of that is weight on your coin, on the upper bounds of your coin. And that was always the thing that kind of pushed against like Ethereum last run, right? You're getting up to 4,200, 4,600, whatever the hell it hit at that point. The dollar amount being emitted at that point in time was a shit ton. And that was kind of the thing against proof of stake versus proof of work, right? Proof of work has, you know, in real life costs that they have to do and they have to sell off to do that kind of stuff. That's kind of the pushback on that. So if you have what's called minimal viable issuance, right? You want to issue tokens at the amount that secures your chain, but no more. It's hard to quantify how much that is, but the less you can emit, then the less dollar weight you have on your coin as price appreciates. So when you have something like Solana that's emitting a lot because it's an early network, whenever you have something like Ethereum just last bull run, it was emitting a lot, and all of that is weight on the upper bound of your actual price. And now what DC investors getting at here is just that minimal issuance to the point where ETH is even deflationary based on some usage, depending on whenever the market is. It's now gone. Like that weight is lifted for this bull run. So they're saying, oh, that upper bound now is potentially higher because that weight is lifted. And that's something that they're really excited about. And then obviously now we're talking about like that versus Solana. It all like it's nuanced, right? Are you optimizing for pure returns? Yes, Solana's probably the better bet if you just want to get best out. Like, are you looking for durability? Like, yeah, I think Ethereum has the more established network, right? If you're cool sitting for a couple of years, or go over to Bitcoin. Bitcoin's kind of the same way, right? You may not get as much upside as Ethereum or Solana. It kind of just depends on where you want to slot your stuff and where you have conviction. Myself, I think people are under appreciating how much because like it's just consensus shit on right now outside of this ETF as recently as last week. So like I'm fine sitting in it, and I am trying to always check myself on how much money I need or I want to get this bull run. And like, I don't need to chase the 75th beta play to every single play, right? Like if I with my current capital allocation can sit in something like an ETH and think ETH is going to 10K, 12K, whatever, then like I don't need to chase the beta, right? Maybe I'll allocate 10% to it. Maybe I'll do whatever. And I'm exposed to Solana. I think Solana is great because, I mean, Anatoly famously said that he doesn't consider it money, whereas like this usefulness you guys are talking about with Ethereum, that's like the moneyness of Ethereum. And Anatoly is just like, no, we're all about like creating profitable apps on top of our platform, and Solana is not money. You don't need to hold Solana because it's so cheap to interact with the platform. People do because they're bullish on the platform, but you don't need to really hold a lot of Solana. I guess you could say it's similar for Ethereum, but anyways, I'm exposed to both, and I'm trying to make smart plays with yield right now. I'm looking at just like fixed yield products because I'm trying not to be greedy, frankly.
Just to add a quick number to that, because Sammy has shared that fantastic ultrasound money website in our private chat. If you look at the total ETH that has been created, it has been emitted since the merge. The merge was 615 days ago. That is 1.3 million ETH, and the total burn since then is close to 1.7 million ETH. So since the merge, since we changed to POS, you have to click on the time frame on the top right corner to change the view. Bit down, and it's basically a burn of 396,000 ETH since the merge. So we've actually been deflationary over that whole period of time. And just to add on Brett's thing that you don't have to chase every beta play onto every narrative, I actually think one of the best beta plays on ETH is just use your ETH in a productive way. If you farm Blast Gold with that, that's a leveraged play on ETH, because if ETH does well, the L2 does well, and you farm a shit ton of Blast Gold, then you basically will profit more than someone who's just holding ETH. It's like entering a leveraged long on ETH if you use it productively in meaningful ways. And I feel like that is enough for me. I don't need to think about, oh, is Solana a better beta play to ETH now, because this is my thesis on there. Just making use of a very, very productive asset is enough in my point of view.
Okay. Super interesting discussion. I found that really, really helpful. All touching on a variety of points, which I hope have not actually been surfaced that much as part of the random noise that takes over CT sometimes. So hopefully that conversation was helpful. We do have 2 more headlines to get to. Funky, I see you with your hand raised. We're gonna have to keep it moving for now. We'll come back to you in a bit though. Hopefully you can come in on the next thing. We have to get to the Mocaverse news, which is the second headline for today. They ripped up more than 50% on the news of the tokenomics reveal. It's almost like the tokenomic. Remember when you minted profile pictures and you'd be like, oh, we've got to get excited about the reveal now. Now, as soon as people are about to announce the tokenomics, it's that same feeling. You're waiting, finding out, is this going to be a good reveal? Is it going to be a bad reveal? Looks like the market likes this one. But I'm going to go to you, Sammy, as ambassador for Mocaverse. What's the kind of TLDR here? What are the key takeaways that you think people should know?
Yeah, so TLDR is so 10% of the total supply has been allocated to the circulating supply of the NFTs. So there's 8,808 NFTs, but there are some that are in the treasury. Those are excluded from the airdrop, which means that actual holders are going to be getting more of the allocation than just dividing it equally by that. So 33%, so a third of that 10% is being airdropped at TGE. Which is, the date is to be confirmed yet, but you could do some moon maths on it. But I think the useful metric is probably just comparing it to the NFT price, and then maybe seeing how much it would, like what valuation it would need to get to for you to break even at TGE. So if you were to buy it today at 3.9 ETH or whatever it's at, I think it would need to hit a 2.75 billion valuation for you to literally make your money back from the Mocha token at TGE. You'd then obviously have the remainder vesting over a period of time, and then also hold the value of the asset, whatever that is, whether it dumps or holds, it's hard to tell. But yeah, so that's they basically just revealed the allocations. There's other, so of the network incentives, which is 31.5% of the total 100% pie, that 21.5% is related to the Mocha IDs, the realm points. So you can, the more you engage in the ecosystem, the more of those incentives you're going to get. only 20% of that is allocated at TGE, so slightly less than the actual NFT holders. But the NFT holders are obviously being prioritized. And I think the reason why the NFTs have pumped is because it's obviously quite a generous allocation to the community. It's obviously community centric, which is kind of the ethos that they're trying to push through with the public sale as well. They didn't need to raise, but they did anyway. They allocated some, and that's kind of coming through here as well.
Sure. I'm just going to break down some of the numbers. I was doing these calculations earlier, and then you mentioned some moon math, Sammy. I don't know if you want to do some of that in a sec as well. But this is how you can calculate the NFT allocation for the people who are interested and might want to know how to do this. I sent this through to the boys earlier to check if I had done it right, and I'd like not divided something by 10 that I thought that I should have done, and I was coming out with 75K for every NFT holder. I was like, this sounds a bit good, boys. Should we be buying this? So I amended that, but this is how you do it. So I said the NFTs themselves will receive 10% of the whole token allocation. It's estimated to be a multi-billion-dollar FDV. Now, crucially, the big assumption is the FDV here. You need to come up with a number there for the whole set of the calculations to work. So you get, here we go. At 2 billion FDV, 10% of this is $200 million, which is the full allocation. 1/3 of that comes at TGE, so that would be 66.6 million. That figure is divided by 8,888 holders, which would mean 7.5K for each holder if there is a if there was 7.5K for each holder if the FDV is at 2 billion. That's that first tranche. So the first third, then obviously you would have another 7.5K, which comes after the 3-month cliff with 12-month vesting, and another third similar to that of future incentives. Sammy, did you want to come in here and kind of think about that in terms of valuation? Maybe you're not able to say like where you think the valuation is coming out at, but I felt like at least over $1 billion, $2 billion. What are your thoughts there?
Yeah, I mean, the valuation is subjective, and I think with the recent high valuation, low float discussion, it's hard to say where it's going to land. But
sure.
Ultimately, the Mocha NFTs are going to be allocated 140K of Mocha, of which 46K is available at TGE. So whatever the price is, whatever that FDV is divided by the total tokens, like you can work out what that allocation is for that TGE for that specific Mocha. And then the vesting as well. I think that, I mean, I agree with you. Like it could come out $1 billion, could come out a couple of bill. I mean, 20 bill is a lofty valuation. I don't think it's there. I slung that out there just to get some reactions and got some haters in the comments, which is always fun. And then, I think just doing some moon maths. I've put together a table that literally shows the valuation at each level and
nice.
like what someone would get. So you can literally see from a snapshot, depending on what you think is going to be an appropriate valuation come launch, then
sounds good. I think you pinned that as well up top, right? If people want to see it.
Yeah, so the one I've pinned is I've quote tweeted the actual thread that looks at the individual levels, but the one that I've pinned is comparing the price of the NFT versus the individual FDVs to work out what break even is if you bought it yesterday at 2.5 ETH versus today at 3.9. And I think those FDVs would be 1.75 bill and 2.75 bill to make your money back just on the TGE portion. So you've obviously got the vested element as well, which is why the tokens have pumped, because people think that it's overvalued, which would suggest that people think potentially it's going to come out at above 2.5 bill, 2 bill.
Yeah, I think that's fair. Okay, we're running out of time. I do kind of want to touch on the Farcaster stuff so we can hear Red's thoughts on that social fi aspect as well. So let's put a pin in that there. Hope that was helpful. Let's get into the Web3 Roundup to get you up to speed with everything else that's been happening in the space in the last 24 hours. Then we're going to get into the Farcaster news. So number one, Jupiter launches giant unified market initiative to bring all assets into a single market. This is where they're trying to get meme coins, RWA, stocks, Forex, all trying to get it onto Solana and onto Jupiter. Next, Trump announces crypto donations will be accepted for the presidential campaign, including Bitcoin, ETH, Sol, Doge, Shiba Inu, XRP, USDC, and Cardano. Interesting to see that. Next, Arsenic drops 50K Neon Vigilante NFTs to pack holders. Pack holders continuing to be targeted on Blast for various things from people who are trying to launch things. Next, Uniswap responds to SEC Wells notice stating that SEC is not the world internet police. They're obviously fighting that battle for crypto. Final three pieces of news. Nifty Portal rebrands to Bodoggos, the crypto entertainment company. Always looking out for what other media companies are doing in this space. Shout out to the Bodoggos, good friends over there of the show. Very interesting and cool branding that they put out. Pew Jackpot wins Blast Jackpot for the second time in a row. This is a new meme coin put out by the Blast. I don't know the names. All of the names have Blast in it somehow these days, but a meme coin made by a Blast project. And finally, X will make likes private for users so people can freely like what they want. Someone from X said this. They said, yeah, we are making likes private. Public likes are incentivizing the wrong behavior. For example, many people feel discouraged from liking content that might be edgy in fear of retaliation from trolls or to protect their public image. Definitely interesting for us, given that so much of our content comes out on this platform. Something for us all to reflect on, I think, at some point in time. But that's the Web3 Roundup. We want to touch on the final headline for the day, which is the Farcaster news. I'll just set it up for people, then we'll get straight into it. It's Paradigm-led Farcaster raise. It's $150 million in Series A. It's integrated with Arbitrum. As you know, this has been blowing up in the last few months as they've been attracting more users, and that degen token has kind of been circulating amongst Farcaster users. It got very, very expensive. People were basically handing out huge amounts of money to each other on Farcaster just for kind of interacting and posting in this Twitter-style competitor, decentralized socialized network, social network. So that's where we're at with that. Brad, I don't know if we want to come straight to you here. You're big on the SocialFi side of things. What do you think of A, just Farcaster itself as a platform? Have you been using it? What are your thoughts? And B, like the raise, quite a significant raise, valuing the company at $1 billion, and what that might mean for further use and things like that.
Yeah, and it gets me optimistic on the sector. SocialFi as a whole is continuing to come back into the headlines, whether it's Friendtech or Fantasy Top or now Farcaster. I'm generally not very bullish on things that compete with established Web2 social platforms, and that's my hesitancy to interact with Farcaster, because I think it's still you have to exist on one or the other. It's impossible to really carry both simultaneously, in my opinion. And I think that'll continue to be the case. Like Web2 stuff is just really sticky with the network that you've created. So excited that SocialFi continues to be a sector that's growing and obviously is getting excitement from investors. But the specific use case of Farcaster or just anything that's competing with Twitter is, it's hard for me to commit to.
Yeah, it's very, very difficult, isn't it, when you have these significant moats? I want to throw to you straight away, Legendary, on this. What are your thoughts here? Do you consider these Web 2 competitors or the people who are bringing Web 3 versions of Web 2 trying to push the space forward? Like, how do you feel about those?
I feel it's a tough battle. I feel like it's important that there is this competition going, even in the same sense. I feel important that Meta tried their X-like platform with Threads and didn't really achieve the success that they were hoping for. But obviously, competition is what fuels innovation. So from that perspective, I think it's good. I think it's one of the toughest businesses to be in because it's just so heavily driven by user numbers that you have, and that's the daily active users, time spent on the platform, etc. Those are the metrics that you raise on. And competing with something like X or competing with the Meta conglomerate, where they basically have or had 3 apps. Facebook has fallen out of that. 2 apps with Instagram and WhatsApp who have more than 1 billion active users. And I think at Facebook's like absolute peak, they did track a statistic how much time on the internet is being spent on a Meta platform, so either on Facebook, Instagram, WhatsApp, and that was almost 1/3 of internet time was spent on their platforms or websites, which is absolutely insane if you think of the many things you can do with your free time on the internet. So yes, I think it's important. It's a massive race. Congratulations for them. But I also think it's like a super tough industry to compete in, because it's very hard for people to switch over to a new social media platform, especially if it's like, I know they do more. They have smart contract integrations, everything. But essentially, if it looks more like a clone of an existing platform, and TikTok, for example, has been different in that sense that it's been video only and so much focused on that, which now obviously Instagram is picking up with Reels, etc. But I do think super tough industry, and especially if you're like so similar to an existing platform, makes it even more challenging. So all the more impressive race in that, under that light.
I wonder whether, maybe Brad, a quick final thought on this. Is it just that time of the market where these VCs have just like tons and tons of capital and they need to allocate? Like, I think that's one of the things that started happening last time, right? And actually, I've been listening to a podcast with Andreessen, it's Mark Andreessen and Ben Horowitz, I think it is, the founders of A16Z. And they actually said this, like the easiest thing out of being the startup is that first bit of attracting the capital right at the beginning. It's like, if you can't get money from us at the beginning, you're like definitely not going to make it. Because what I guess their argument was like, look, we actually have all this money to allocate, and we know half of you are going to fail anyway, but we have the money to allocate. And actually, the hardest stuff's going to come after, like once you actually need to build the stuff. And I'd never really thought about it from that perspective, but do you have any reflection there?
So yeah, actually, whenever I saw this raise, I went back and looked at the DeFi Llama raises chart just to see, like, are we trending up? And I'm not like seeing it all, hearing it all, and we're still a quarter of the way from the hype of last cycle, 2021. So like, yes, there are like A16Z and Paradigm are established firms within the ecosystem that are being given money to then further allocate to projects. So like, to see them do big raises and stuff is like a good indication that we're starting to see that thaw. But we need, like, I'm not going to consider it frothy until, one, the cumulative number is at or exceeding what we had last time, which is somewhere in the 3 billion per month range. And then start seeing the boutique VC firms come up that like no one had heard about, but all of a sudden they're allocating $750 million to dog only projects or whatever.
Got it. That's such a good, I've definitely got my eye on that, those numbers as a potential indicator for where we are in the market. Interesting point to make. Thanks for bringing some further insight there, Brad, and thank you for all your contributions. Great to have you with us as always. What can we expect on the timeline from you today? I know you're cooking up some hilarious images potentially. What content's coming today?
You know, honestly, so the L1, L2 debate or conversation and how that actually translates to the block usage of Ethereum, I think is still kind of misunderstood. And that put an image in my head. So I'm going to work on an image that shows how the transition of Ethereum as it grows will actually look when it comes to like block utilization within it. Maybe I'll do that. I don't know. And then Fantasy Top, that's my other one. I got to keep an eye on that.
Love it. Looking forward to it, mate. Thanks so much for joining us. And thank you, everyone else, as always. Thank you to my legendary co-hosts, Legendary and Sammy. And thank you for joining us in the audience. We do this every single day, Monday to Friday, 7 a.m. Eastern Time, 12 p.m. GMT. We're live on X in the audio, live on video, live on YouTube as well. Go like, subscribe. I think we've just gone past 300 subscribers on YouTube. It's about damn time. If you haven't subscribed over there, please go and do that. Have a wonderful day. Take care. And we will see you tomorrow. Bye-bye.